guys, Akil Stokes here. Welcome back to another episode of the Trading Edge video. We've been on a heater of lately hot times in the market, which I'm excited about, which reminds me to give you guys a little bit of a warning. I know you guys are tuning in each and every week to watch this video. You're looking at the ideas, and I've gotten some great messages from you about how much you're enjoying the content and how much you're enjoying the ideas. But as I had to warn a few of you guys, just remember that this isn't a signal service. I don't want you coming in here kind of just trading whatever I say is good. I want you using it as a chance to help you develop as a trader. So a chance to see analysis from perhaps a different perspective and kind of learn the ins and out of what I'm looking for, why I'm looking at it, and how I trade. So I'm excited that you guys are making money. That is awesome. But I really don't want this to be a signal service. This is an educational kind of place here. Now, speaking of education, I want you guys to mark your calendars. I've been reminding you for a little bit now, but starting on March 25th, we're hosting a 1-week free online trading workshop. I have zero details for you. We don't even have a name, but we know that on March 25th, we're going to host it. It's going to be live, it's going to be free, and it's going to be awesome. So mark your calendars. It will be recorded, but if you've ever attended any of our workshops, you know that being live gives it a different feel. So let's get started here on the pound dollar. All of the pairs on my radar this week actually are pairs in my portfolio, so I'm excited so I can make money off them as well. And pound dollar, although we have a bigger potential Gartley pattern setting up, which I know some of you guys are screaming at your computer right now. Talk about the Gartley, talk about the Gartley. Good eye, congratulations, pat yourself on the back. You are right, X to A to B, B to C right there, and we'd need this to rally up for a CD completion. Let's put that to the side for a little bit, and let's talk about something else that is occurring. Now, if you remember pound dollar, we've been kind of breaking down this pair for a very long time now, starting on the daily, where we started off with a trading idea down here at consolidation. We never got the signal. We came down to a lower low, got a nice buying signal down here. And now we're looking for I'm looking for another continued move up here, right? If we go down to our hourly, and you may need some confirmation on the higher time frame first, but for you guys that are hourly traders, if you're going down to our hourly, you're going to see that we just broke and closed above a pretty significant structure shelf, ice zone, structure swap, whatever you want to call it. And we're starting to retrace right now. Now, we do have a lot of consolidation we have to fight through, but if I had to pick a level to the upside that we're likely to go next, I would pick this level right in here, this consolidative level, let's say right at 2660s up to about 2684s. And you can see we're currently pulling back right now. So if you have a chance, you may need to hop on a lower time frame to see this, but watch for price to retest this little area right here and give you an opportunity to trade it. Wrong tool. Here we go. Trade it back up to this level. Could be a really decent trading opportunity. Let me just see if that's a 1618 Fibonacci extension. I think it is. Swing low to swing high. Fibonacci extension and back down. Yep, nailed it right in that level. So you have some Fibonacci influence there as well. And of course, we can do more analysis as this trade evolves. But keep an eye on a retracement down into that 125.90 to 125.82 level for an opportunity to buy. Following up on that, we're going to go to the pound yen. Very similar opportunity. This one's a little bit more, I guess, classic, right, where we have a name for this pattern here. Now, for you guys that have taken the foundation course or the foundation 2 course, I forgot which one I taught. I think it was foundation 2 course. I gave some pretty good advice to you, and I think this is helpful. This is great advice for any new trader, especially if you don't want to get confused, right? You're going to see all types of stuff in the markets. You're going to see advanced patterns, you're going to see classic patterns, you're going to see this, you're going to see that, candlestick formations, right? I want you to not get overwhelmed by the amount of information and opportunities that are out there, and that's what happens to a lot of newer traders. They get overwhelmed because they see so much out there that they think they have to learn it all right away, and obviously you can't learn it all right away, right? But you think you have to, then you feel behind and defeat it and all that fun stuff. Reminds me of studying for a test in high school, but think about it like this. At the end of the day, there are 3 different ways to trade, right? There are breakout trades, right? There are reversal trades, and there are pullback trades. And everything that you see in the market is going to fall under one of those 3 categories. So if you can just think about it in those terms, right? Human beings like thinking in 3. So 3 is very easy to kind of think about. Think about breakout. How can I trade this being whatever it is as a breakout? how can I trade this being whatever it is, as a reversal? Or how can I trade this, whatever it may be, as a pullback? And I think it will really help you kind of, really filter the information and make things less confusing. So, for example, what we're looking at here is a classic head and shoulders pattern in the market, right? Price action comes down. Not your best classic one, but it is a head and shoulders. These things aren't always pretty. We don't judge. Left shoulder, head. We talked about this last week. Right shoulder over here. And then we recently broke this neckline, right? So if you're unfamiliar with head and shoulders, this is going to be really confusing to you because like head and shoulders, oh my gosh, I didn't see the right shoulder. How do I know this? How do I know that? And I want to tell you that that stuff doesn't matter, because if you go right back to the previous pair, you'll see that at the heart of things, right? When we think about those three, this is the exact same setup. What are we looking for here? We're looking for a break and close above structure. If we break and close above structure, then I look for pullback into structure, right? Previous structure resistance turns to support, or turns to expected support. Same thing. We can look at this as a head and shoulders. We can get all fancy and draw a neckline, or we can just say, hey, Akil, there's a big shelf of structure right here. If we break structure, then look for pullback into structure. Previous structure resistance acts as potential structure, future structure support. It's the same thing. Now, again, I'm not saying that knowing the names of these patterns and whatnot is irrelevant. It's helpful because, again, it helps us increase our edge. But at the end of the day, those three categories, if you can understand those three styles of trading, you're going to have a much better opportunity of getting a grasp at all the other things that are out there, and it'll be less overwhelming. So same type of situation here, right? We broke the neckline, confirming, or violated the neckline, confirming the head and shoulders pattern. Now we're looking for a pullback. This looks like a very good area right here. And then again, we project an extension back up to our previous level of structure. This is an interesting one. We've had lots of conversations about this in the live room, whether you want to be aggressive or conservative, and how you identify structure and what parts you go for. If you're super aggressive, you're looking for the very, very top right here. You'll get more reward, but there's also more risk built in. If you're super conservative, you're looking for the very low part right here, which we've already come to, so the move has already been made. If you're somewhere in the middle and maybe more experienced with drawing out structure and resistance zones or finding ones that are important, you can find this nice little area right here. You can see that there's still a little bit more meat on the bone here. So keep an eye on this pound yen hourly chart, another pullback trade, head and shoulders as well. All right, next we're here on dollar yen. I told you earlier, maybe this was another conversation I had, that patterns have been on fire lately. In fact, there was one that we spoke about pound dollar. I didn't show you this. There's one that came here on the pound dollar as well. Look at this bad boy. This was beautiful. X to A, A to B, B to C, C to D, rolled right over. We've got one forming here on the dollar yen, right? Back on the 4 hour. Again, short and simple with this. We want to measure out our impulse leg, our starting point. And again, if you guys are new, don't get overwhelmed by patterns. They're pretty simple. If you know how to measure the ebbs and flows of price action, you know how to draw, then you'll know how to draw fibs on. If you know how to draw fibs on and understand how to follow instructions step by step, then it's really mechanical. Speaking of which, I had a conversation with a trader this morning, not to get on too much of a rant, about, they're thinking about joining tier 1. They're asking what type of trader I was, and I told them, hey, I'm a discretionary trader, price action trader. And they were like, well, I'm looking for something more mechanical because I have issues, blah, 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 blah. And I said, well, don't get me wrong. I'm not one of those discretionary price action traders that just hops in the market and does whatever I want. Like, ooh, that feels good. Let's take it, right? No, like we approach it in a mechanical sense where we have step-by-step rules on what to do. We give ourselves some discretion to analyze the market like any true artist, but everything we do is rules-based. So it's a rules-based discretionary style of trading, not just a kind of a feel it in my bone type of thing. So when we're looking at patterns, we go step by step, right? Step 1, find impulse or anchor leg. We call that our X to A leg. That's going to be bang right there. Step 2, bring on Fibonacci retracement, right? Step 3, identify where Fibonacci retracement for the B leg ends at, right? Boom, passes the 618 retracement. I know that since we have a 618, I know what I'm looking for, a potential Gartley pattern. And we just keep following those steps all the way through until we get to the completion. And to keep things on the short side, I'm just going to measure this out quickly with the 127. We know that in this particular case, because of the depth of this B leg, our Gartley pattern, our expected Gartley pattern completion is going to be right down here at the same level as the bat pattern, 149.11. So if price action goes down to that level, boom, I will be filled on my orders looking to buy it up. It's as simple as that. Again, it's not rocket science. It's basically, can you master the basics and can you follow rules consistently? So Aussie dollar is an interesting one. Let me show you this real quick. We've created a nice little structure shelf, nice little ice zone structure swap, whatever you want to call it. Let me just draw this out for you. You'll see we came down, found a nice level of structure support right here, consolidated here in the middle, came back to that same area of structure support, bounced off it right here, came back down, finally violated previous structure support. Now we'd expect it to act as resistance, came up here, found resistance, retraced down, failed to get lower, came back up here, found resistance again, this time came lower, and now we're back up with a deep retracement at that same resistance level. So two opportunities here, depending on if you're long or short. I think this is a great opportunity for a buyer or a seller. If you are a seller, we're right at a structure shelf, so it's very easy to place a stop loss, right above this previous or this current level of structure. You don't need to be any further than right here. Wrong tool, but that works. You don't need to be any further than right there to know that you're wrong. You don't need stops up here to know that you're wrong. You'll be wrong pretty quickly. And what that will do is it will help you kind of set up a really good risk profile. It doesn't matter where you're trading at. If you're looking for the lows here, you got a decent level. If you're looking for a retest of the lows here, you have a decent level as well. On the other hand, right, this is a decision point. If we end up violating this level, the blue line, right, then we can expect a move higher. And if we expect a move higher, then again, I expect us to come across this channel right into this area. So me personally, I'm looking for the long trade. So looking to see if price action can violate these levels, if we can take out the stop orders that are right here, the same ones that I told you the sellers would have, those buy stops. If we can trigger those buy stops, if those buy stops introduce more and faster buying pressure into the market, we should see this thing rally back up. So this Aussie dollar is one that is certainly on my radar. Now, before you go, make sure you subscribe. If you didn't see it, I put out a handful of midweek videos talking stocks, talking investments, showing some of the trading opportunities that we looked at during the week, giving some walkthroughs, basically a whole bunch of quality content all for free. And all I ask is that you subscribe and maybe hit that like button if you have an extra second or so before you leave. All right, I'll see you next week, guys. Until then, plan your trade, trade your plan. March 25th, mark it down. I look forward to seeing you there.